Well, that was way less violent than I wanted it to be. I don't know what I was expecting, like the money to blow up or something when I lit it on fire, but that was pretty mild. I mean, that does not do today justice at all. By the way, that was copy money. I would never burn legal print, real money. That would be dumb, especially if I could just use that $100 to buy stocks right now. But holy smokes, no pun intended, today was brutal. The markets had their worst day since June of 2020, when the global economy was on the brink of total collapse from the COVID-19 pandemic. Do you remember those days? Do you remember them? Because I do. And today the NASDAQ was down almost 5.5%. Futures are looking pretty green, so there's a positive, but we all know this. Anytime the market has an instant reaction, it's always an overreaction, whether that's to the downside or the upside. Today definitely was an overreaction to the downside. I fully expect that tomorrow we're going to have a very, very green day. Don't sue me if I'm wrong, because I've been wrong in the past. I also just randomly got a mild sore throat today, so I apologize if I sound raspy at all. I don't know if that's from me inhaling all of this burnt money. And also, we're wearing a plain black t-shirt in today's video to honor the complete death and collapse of my stock market portfolio. I also clean shaved for the first time in forever. I don't think I'm going to do that again. I'm not a superstitious person, but today I am. But today, as I'm sure you already know because you are studious investors, we got our new inflation data for the month of August. And if I asked you right now, I would guess that more than 50% of you would not realize that inflation data this morning actually showed inflation cooling off further. I think most people are convinced that inflation reaccelerated, and that's why the market sold off today. Well, that is just simply not what happened at all. Dating back to June, when we hit the peak of 9.1%. There, I finally got it on the computer screen. 9.1%. In the month of July, it went down to 8.5%, and then with the CPI data this morning, it went down to 8.3%. So yes, inflation cooled off even more this morning, but not as much as the markets wanted it to. And that's kind of the beauty and the beast with a bear market, is sometimes good news, like inflation cooling off further, ends up being terrible news based on what the markets expect to happen. The opposite is also true a lot of times, where bad news is received as good news because the bad news isn't near as bad as the markets had expected. And this is why it is so hard to be a trader in such a volatile market like we have today. In reaction to this new inflation data we got this morning, we also had the markets price in a 33% chance of a 100 basis point rate hike next week for the month of September, when this next Fed meeting takes place. That is ridiculous, because before today, the markets were pricing in a 0% chance that the Fed would raise rates by a whole percentage point. That has completely changed as of this morning. Right now, the most favorable outcome, or the most predicted or anticipated outcome, is for the Fed to raise rates by 75 basis points. I think personally there is a 100% chance the Fed is going to raise rates by 75 basis points next week when their Fed meeting takes place. I think there is a 0% chance they're going to do a full percentage rate hike. Much of the increase in core prices in August was due to a rise in housing costs, which climbed 0.7% in August, rising 0.5% the month before. And the economists worry that shelter costs could stay elevated for months, even as the housing market cools, in part because of the way rents lag behind home prices. This paragraph is why I don't believe a 1% interest rate hike is even on the table or remotely possible at this point in time. The Fed has to be extremely careful as it sits today not to over-tighten and raise rates too much, because the bottom line is, when you raise rates, it takes a while for the economy to react to those rate hikes, to properly price those in, and to finally see prices start to fall. We don't know the impact that the recent 75 basis point hike is going to have on the economy, even a couple of months after the fact. And if they raise rates again by 75 basis points in September, we're not going to know the impact of that for another 2 to 3 months, which pretty much takes us into 2023. And I can guarantee you this, the Federal Reserve does not want to cause a recession. No Federal Reserve in history has wanted to do that because it has negative connotations to it. Jerome Powell wants to go out on a positive note. He doesn't want to be known as the Fed leader that caused a recession. And the group of individuals leading the Federal Reserve today, I think, is smart enough to realize that they simply cannot afford to raise rates by an additional 1% this month in September. They need to relax a little bit and wait and see how the rate hikes that they have already done impact the economy. The bottom line is we simply don't know the impact that a lot of those rate hikes have had yet. It's also counterintuitive for the Fed to raise rates because of how much debt our government has outstanding. When the Federal Reserve raises rates, they are being cannibalistic because when they raise rates, that makes them have to print more money to pay off their debt that the government has, which is why we're fighting inflation by raising rates in the first place. But printing more money to pay off that debt because you raised rates and you have to pay more money to pay off the debt, it's a never-ending cycle that just doesn't make much sense. It's counterintuitive. So this begs the question, should you be selling everything right now? In addition to this negative inflation data, I don't think it's negative because inflation is coming down just slowly, which makes sense. Inflation isn't just going to go to zero overnight. I don't think anybody expects that. But alongside this inflation data, the railroad strike is appearing more and more likely. The reason this matters so much to the economy, and you might not realize it, is because trains still carry about a third of total freight in the country. And if railroad workers go on strike, that is going to create supply chain issues, which we've been dealing with for a year now. Nobody wants supply chain issues. But if the railroad strike does go through, we will see increased supply chain issues, which will push up inflation, which does not benefit anybody. It's all a mess right now. But the hope here is that the railroad workers don't want to go on strike, because if they go on strike, Congress gets involved, and they do not want Congress to get involved. The President of the United States can't really do anything right now. This is probably going to go to Congress, but the railroad, again, doesn't want it to go to Congress because they don't want Congress to get involved. It's all a stalemate right now. Your guess is as good as mine as how this is going to play out, but it's something to keep your eyes on. It's not easy just to shift 33% of the nation's freight to semi-trucks. It's not easy to change the logistics of that overnight. We need the railroads to stay open, and I think this probably had an even more negative impact than the inflation data had this morning. The White House is currently crapping their pants about this, and for good reason. They're discussing contingency plans amid the rail shutdown threat. They are urgently discussing contingency plans as the threat of a railroad shutdown looms, with agencies across federal government working through how they could potentially use federal authority to keep critical supply chains operational as labor talks continue to sit at an impasse. I don't know how to say the word. You get the point. This is a major, major problem for supply chains. And if the railroads do go on strike, as I've already covered, this would be very, very negative to the fight against inflation. Supply chain challenges have finally been starting to get worked out. Used car prices have started to come back down as chips for new vehicles started to come readily available. Bitcoin mining rigs, computers, everything started to come down as supply chain issues and bottlenecks finally were starting to get worked out. But this represents a huge challenge and a huge problem to the economy, and it's very important for us to keep an eye on this. On this channel, I will do that. But as for selling everything, I think that is an incredibly stupid idea, no offense. Anytime that the markets have sold off by more than 5% in a day, as the NASDAQ did today, it has never been a good idea to sell out of all of your stocks following that event. Any time in history where the markets have fallen 5% in a singular trading day, if we look back in history, that has worked out to be a tremendous buying opportunity. Now, yes, this time could very well be different, but we have over 200 years of stock market history to prove to us that now is a great buying opportunity, not a selling opportunity. Things are painful right now. I get it. People are losing money. My portfolio today was not in good shape. It makes me sad to think about it, and I'm sure you're the same way. But seriously, right now is not the time to be a seller. Not the time at all. When things start looking the most bleak for the economy, usually that is when the stock market bottom hits. I personally think we've already seen the stock market bottom. I think we would have needed to see a reacceleration of inflation this morning rather than a slower than expected decline in inflation in order to see new lows in the stock market. I think bears are probably convinced that we're going to retest lows. I, for one, am not convinced of that. The economy continues to improve. The Russia-Ukraine conflict maybe is starting to ease, maybe is coming to an end shortly. Things are about as bad as they can get right now. And when things are about as bad as they can get, again, I keep saying it, but it ends up being a tremendous buying opportunity. Now, I always could be wrong. This could be the beginnings of a new American Revolution. This could be the beginnings of a new American Civil War. This could be the beginnings of World War III. Who knows? It's all a possibility. But I, for one, being as young as I am, will never, ever bet against the United States of America and its economy. That has been an awful idea throughout all of history. Beyond that, if you're selling stocks right now, you are betting against what Warren Buffett is doing. Warren Buffett has been buying stocks like crazy. You're fighting against record amounts of share buybacks by huge companies that have balance sheets to support share buybacks for years and years and years to come into the future. You're fighting a lot of different things that result in the markets not going back to lows and not crashing like back to the 2008, 2009 levels. That's an argument I saw today. And I think it's an argument that's taken place more and more often. People are convinced that we're going to go back down to 2008 and 2009 levels in the stock market. I can't guarantee anything. I'm not a financial advisor. Don't sue me if I'm wrong, but we're not going to see 2008, 2009 levels again. I'm sorry. We're just, it's not going to happen. But anyways, with that, I'm going to end this video here. If you're new here or returning and not yet subscribed, please subscribe down below. Comment down below what you're doing. If you're screaming in panic, calling an ambulance, let me know. Selling your stocks, let me know. If you're buying stocks, let me know. I want to know what you're doing. I want to keep tabs on the retail investors. I think here on this YouTube channel is a great way to do that. With that, stay blessed. Keep your chin up, 10 toes to the ground. Peace out.